Ladies and gentlemen, good day and welcome to Infra Engineering Limited Q4 FY24 earnings conference call hosted by Go India Advisor. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisor. Thank you and over to you, ma'am.
Thank you, Sejal. Good morning, everybody, and welcome to Infra Engineering Limited earnings call to discuss the Q4 and FY24 results. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. We now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. So welcome everyone to Q4 and FY24 earnings conference call of Infra Engineering Limited. The financial results and the investor presentation have been made available on the exchange, and I trust you all had the opportunity to review it. Before I proceed with the presenting of the key financial and operational highlights for the previous financial year, I would like to offer a concise overview of the sector and the opportunities it presents for Infra. I am pleased to announce that has delivered exceptional performance in FY24 across all fronts. We have achieved substantial progress in diversifying our order book by securing 4 non-road projects in this financial year. Additionally, this year marks a significant milestone as we have reinforced our presence in the highway and road sector with 2 successful new projects in Q4 FY24. Not only we have expanded our order book, but we have also taken meaningful steps toward diversification in solar power plant projects. Now I would like to provide some updates on the infrastructure sector. Talking of roads, India's infrastructure sector is booming, fueled by a significant funding boost of rupees 2.78 lakh crores for FY24-25. With this 1.68 lakh crores earmarked for NHI, the focus is on developing national corridors. Building upon this momentum, the Vision 2047 aims to construct 30,000 to 35,000 plus kilometers of highways and 50,000 kilometers of high-speed corridor by 2047. This ambitious plan emphasizes the government's commitment to fostering extensive connectivity and facilitating economic progress across the country, concurrently presenting abundant opportunities. In recent decades, Infra has solidified its position as a formidable force in the infrastructure sector and has proven its mettle over the last many years in the EPC and HAM sector. HG sees abundant opportunity and is keen to participate in BOT mode with the association of other key players such as Highway Concessions One, Cube Highways, NIF, and other prominent players like Adani and IRB as EPC players, where we are already being associated with these companies. Railways and Metro, as a part of our long-term strategies of diversifying our order book, we continue to gain considerable ground in the railways and metro segment. The budget has earmarked rupees 2.55 lakh crores, focusing on multi-tracking corridors and station remodeling. A significant portion of this budget is dedicated to multi-tracking 7-speed, high-speed density corridors, facilitating the expansion of rail network by 10,959 kilometers over the next decade. Additionally, the Amrit Bharat Station Scheme further complements these efforts, aiming to remodel 1,309 stations by 2030, thus enhancing passenger experience and operational efficiency. The significant momentum observed across various sectors has created ample opportunities. In alignment with our strategic approach, we are prepared to grab these opportunities. With 6 railway projects currently in the order book across 5 states, HG is well positioned to capitalize on the government's initiative, and we are all equipped with the required capex technology and skilled human resource for network expansion and station development, that is modernization of existing infrastructure, civil work, and dedicated high-speed railway corridors. Solar and renewable energy being talked nowadays, the renewable energy sector is gaining focus with ambitious targets aiming for 450 gigawatt of installed capacity by 2030, where solar energy constitutes over 60%, and in the latest budget, 1,000 crores were allocated for SECI and rupees 19,500 for a PLI scheme to enhance solar module manufacturing. HG Infra, recognizing this lucrative prospects, proactively pursued bids and successfully received solar power projects for development under Kusum C. That is for 543 megawatt DC, valued at 1,307 crores EPC value, that is exclusive of GST. The company is also exploring additional opportunities in solar park development, solar projects, including rooftop installations. These projects is a testament to HG as a leading EPC company in the infrastructure space. In water sector, the Jal Shakti Ministry budget has been increased to 98,418 crore for FY2024-25, up from 96,549 crore in the previous year. That highlighting ongoing investment in water infra, and in second phase of Namami Gange program, government has approved 22,500 crores, out of which around rupees 11,275 crore is allocated for new projects. HG Infra is keen to participate in projects like Namami Gange to clean the embankment and rejuvenate the Ganga river, pollution abatement, infrastructure development near the river, projects related to water desalination, wastewater treatment plants, and other water supply projects in rural urban areas like under JJM schemes. Rainwater harvesting storage under Jal Shakti Abhiyan will be our priority card to contribute with a revenue of around 50 crore for which we are targeted for this financial year. Furthermore, we are looking forward for partners with strong background with credentials to cover the technical eligibility for strategic partnership for breakthrough for projects in water sector. Let me start the journey of this quarter and give you the glimpse of operational highlights first. As I mentioned earlier, our order book has not only grown but also diversified as of March 31st, 2024. It stands at rupees 12,434 crore, that is the EPC value EPC constitute 28%, while HAM constitute 40%, railway segment contribute 22%, and solar segment contribute 10%. Let me now update on the ongoing EPC projects. The Ganga Expressway project has reached a milestone of about approximately 54.3%, adhering to the contractual timelines of the contract. Delhi UER project stands at around 93.1% completion, and it is anticipated to be completed in this quarter only. The Nelamangala Tumkur project could not reach up to our expectations, and its execution status is around 28% because non-availability of the land, for which NHAI is pushing hard and for faster balanced land regulation and encroachment free. The progress of various HAM projects is also running as per the planned schedule. The Karnal Ring Road project has achieved 23.9% completion milestone and is progressing well within the established timelines. Raipur-Visakhapatnam OD project has progressed to 65.9% completion, and we look forward to complete this by Q3 of this year. Raipur-Visakhapatnam OD6 project is currently at about 73.7%, and the same would be completed by Q2. The Raipur-Visakhapatnam AP1 package has achieved the completion status of 69.5%, and the same will be completed by Q2. In the Khammam-Devarapalle project package 1, where we have achieved 50% completion, while package 2 is at 53.7%, both the projects would be completed by Q3 and Q4 respectively. The Varanasi-Ranchi-Kolkata package 13 and 10 is currently in the initial stages of land acquisition and are anticipated to pick up momentum in second and third quarter respectively. Turning on to the progress of the railway projects, the MRC metro project has reached completion of about 50%. Bilaspur Himachal Pradesh railway project has progressed to 10.3% completion, though initially it was delayed due to heavy rains because of the backwater of the dam. It is now progressing well. Kanpur Central Railway Station project has recently commenced with a completion status of 4.12%. Let me now invite Mr. Rajiv Mishra, CFO of the company, to give an overview of the financial highlights of this quarter and overall FY24.
Thank you, sir. Last year, ICRA has upgraded our ratings from stable to positive for our long-term, short-term facilities and NCT on account of the financial growth and discipline. Our financial performance in the last quarter and the entire year has been satisfactory. At the standalone level, the total revenue of FY24 has reached 5,122 crores, reflecting an impressive 15.9% year-on-year increase from 4,419 crores in FY23. EBITDA amounted to rupees 822 crores in the current fiscal year, resulting in an EBITDA margin of 16% compared to 710 crores and 16.1% margin in the corresponding FY23. PAT for FY24 stood at rupees 546 crores with a profit margin of 10.7% compared to rupees 421 crores and a margin of 9.5% in FY23. In Q4 FY24, standalone revenue reached at 1,635 crores, representing a significant 11.2% year-on-year growth from 1,417 crores Q5 FY23. Standalone EBITDA for Q4 FY24 was rupees 265 crores, reflecting a year-on-year growth of 11.3% PAT, and PAT margin for Q4 FY24 stood at rupees 160 crores and 9.8% respectively, compared to 148 crores and 10% in the same period of the previous fiscal year. Regarding the company's debt position on a standalone basis, the gross debt amounts to rupees 451 crores, including working capital debt of 69 crores, term loans current maturity and the trade limits totaling to rupees 334 crores and NCD of rupees 48 crores. Moving on to the consolidated numbers, for FY24 revenue reached to rupees 5,378 crores, growing at 16.4% year-on-year increase from 4,622 crores in FY23. EBITDA reached rupees 1,062 crores with an EBITDA margin of 19.7% compared to 895 crores and 19.4% margin in FY23. PAT for FY24 stood at rupees 539 crores with a profit margin of 10% compared to 493 crores and 10.7% margin in FY23. In Q4 FY24, the consolidated revenue reached to rupees 1,708 crores, making significant 11.3% year-on-year increase from rupees 1,535 crores in FY23. Consolidated EBITDA for Q4 FY24 stood at rupees 333 crores, reflecting a year-on-year growth of 12%. PAT and PAT margin for Q4 FY24 amounted to rupees 190 crores and 11.1% respectively, compared to 171 crores and 11.1% in the corresponding period of the previous financial year. In the context of the company's debt position at the consolidated level, the gross debt amounted to rupees 1,500 crores approximately. The total equity requirement of 10 HEM projects is of 1,461 crores, out of which we have infused 694 crores in this financial year and 505 crores is estimated to be infused in FY25. Let me give a glimpse of the status of the monetization of 4 HEM projects. First tranche of the 3 projects which are sold in the last year, transaction of 3 SPVs, Gurgaon Swana, Rewari Ateli and Ateli Narnaul. They have been completed on 21st November 2023 with 100% SPV shares transferred from AG Infra to Highway Infrastructure Trust. We have received 315 crore as of now, and rupees 60 crore will be released on the receipt of approval from NHI for GST change in law claim. It is expected to be received by June 2024. The second tranche, as far as the updates on the monetization of the 4th project, Rewari Bypass, is concerned, we have received NOC from NHI and lenders for the change in the shareholding in March 24. Compliance of the conditions precedent as per the SPA is in the process and expected to be completed by May 2024, and the transaction is expected to be completed by June 2024. Around 130 crore is expected to be received from Rewari Bypass SPV. For other significant updates of FY24, I would now request MD sir to take over and share the developments with the forum. Thank you, sir.
Thank you, Rajiv. Let me now share other significant updates for FY24. Though initially we have projected to get around 8,000 crores of new projects during FY23-24, however, due to the all-time low awarding by NHAI, we ended this year order at addition at rupees 4,350 crore, that is exclusive of GST. In Q4 FY24, the company effectively secured 3 new orders in the railway sector in EPC mode, that is Dhule to Nardana railway project in the state of Maharashtra, that is on Central Railway worth 716.11 crore, Aurangabad Karanjgaon Railway Station project in Maharashtra, that is inclusive of electrification and signaling work from South Central Railway, valued at 447.11 crore. Gaya Sonnagar Railway Station project, that is a DFCC project in the state of Bihar, awarded by East Central Railway for construction of double lane track, including earthwork blanketing on the electrification works, that is valued of 709.11 crore. These all projects are inclusive of GST. The two new projects of highway were awarded Chennai-Tirupati Package 2 in the state of Andhra Pradesh for construction of access control highway of 4-lane on HAM, that is having the EPC value rupees 760 crore, and the Kali Mandir Dimna of EPC mode in the state of Jharkhand, near to Jamshedpur, that is 610.11 crore. Universe of solar and renewable energy, we are happy to share for forum, the company has entered in the solar segment and has been recently awarded solar power project development work at the Kusum C for 543 megawatt DC of rupees 1,307 crore EPC value, which is excluding of GST. The company has secured contracts from Jodhpur Vidyut Vitran Nirman Nigam Limited on the Kusum C Yojana, collaborating with Stockwell Solar Services Private Limited in JV consortium. Together we will work on the solar power plant totaling 528 megawatt DC, that is worth rupees 2,300 crore. The works involve procurement, erection, installation and commissioning of the plants within a period of 12 months from the date of PPA, and then maintaining them for 25 years. These projects will be executed through project SPVs. In addition to that, HG Infra has also won two small solar projects of 12 megawatt worth 62 crores. The total equity requirement in the solar project is estimated to be rupees 540 crore, out of which we would infuse rupees 270 crore in FY24-25 and balance in 25-26. Let me touch base on the future guidance before I conclude this speech. This year is very vital for us in terms of our physical progress in our running projects, as we are heading for the completion or nearing completion for many of our growth projects like UER, Khammam Devarapalle Package 1 and 2, Raipur Visakhapatnam Package Orissa 5 and 6 and AP1, and even Ganga project. With that, certainly we will have to add new projects for which we have to work on the order inflow to the tune of rupees 12,000 crores in road, railway, solar and water to sustain and scale our business to create value for the shareholders and ensure healthy order book. So we are geared for the next growth phase of the company, and we believe that we will achieve 15 to 20% growth in the top line in this coming year and maintain steady margin in the range of 15 to 16%. We have all the ingredients to achieve the milestone with all senior leadership in place, skilled manpower, strategies to move on, digital transformation, with automation capex, think tank team to explore diversity in business. These strategic moves are poised to contribute significant value to our financial indicators, fostering a seamless and transparent real-time working environment, and will truly help us to augmenting our operational efficiency, and cost optimization factor will positively impact on our bottom line. We can assure to all our internal and external stakeholders that we are committed to solidify our success footprint in the financial year. I conclude the dates of FY24 and open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue is set.
There are more than 20 parties in the conference.
Ladies and gentlemen, you may press star and 1 to ask questions. The first question is from the line of Dipen Shah, who is an individual investor. Please go ahead.
Yeah, good morning and thank you for this opportunity. And congratulations to the management on a good set of numbers. Sir, I had a couple of questions on the new areas of operations which we are entering. Firstly, on the solar segment, we have got 3 contracts.
There are more than 20 parties in the conference.
Worth about 1,300 crores. So just wanted to understand, like, in terms of our capabilities.
There are more than 20 parties in the conference.
Sir, am I audible?
Yeah, please continue.
Yeah, so just wanted to understand in terms of capabilities, how are these projects different as compared to what we have been doing? And how have we built up the capacities for installation of these projects? The second thing is that since this is a private party, but it is under the KUSUM scheme, so, how confident or how comfortable are we about the receivables from this project? So this is the set, and I have another set for the new business, which is Namami Gange. Thank you.
So your question remains that this is not a private party contract. This is a Rajasthan Discom, which is a Jodhpur Discom. They have awarded. The consortium has received the project, which we have split into 2 parts. That they would be doing, Stockpile would be doing 35% of the total project value, and balance 55% of 1,300 crore would be done by AG. So this is one confusion into it. The second part is in EPC, these projects do have 85% procurement. That is all related to module and structures and electrical works where the poles and transmission lines being laid. So the only 15% of the work which remains civil is the area grading level works and even fencing. So this is we have already done during 2012-13 when we worked for Lanco earlier days. It's not that difficult. It's a very small kind of a project. So it's only procurement part. So we do have already has carved out our initial stage EPC team within the company. So that's already in process, and we will be doing within the company itself.
Okay, and sir, since about 85% of the project is a procurement, would margins be similar to what we have currently in EPC contracts, or would they be lower than the existing margins, sir?
No. So we have kept both the provisions. So since the projects are having the tariff, which is the average 3.27 rupees, 3.27 is the average tariff we usually getting. So we have maintained the EPC margin guidance at about 15 plus in these as far as EPC cost is concerned, as well as equity around about 15%.
Okay, sir, and the project of 1,300 crores includes the maintenance also? This is only the EPC part, sir?
It's purely EPC. It's purely EPC cost.
Okay, it's purely EPC. Okay, and sir, on the Namami Gange front, there have been talks in the market, previously about the projects not getting, completed on time and there being receivable problems. Any take on that, sir? Are things smoothened out quite a bit now when we do not see
No. So it's an initial discussion which we are doing with one of the company where they are already have involved already. So they have completed 2 of the projects. So we are looking into this sector where probably JGM or water sector projects are all there, water desalination plants and water treatment plants. So it's only an initial point which we have discussed during this speech.
Okay. And sir, lastly, just one question. We have given a guidance of about 15 to 20% growth, which should be about around 6,500 crores. Of which, how much visibility we have in terms of existing projects which are continuing, and how much are we dependent on new projects starting during the year, sir?
The dependency on the new project for this current fiscal year that we already have considered 700 crores to be added from the new projects. That is from high railways. Otherwise, all the projects which we are already having, since they are all under execution, they will be contributing significantly in this particular number.
Okay, that's great to hear, sir. Thank you very much and all the very best to you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir. Just again trying to understand both on order inflow and the revenue part. So when we are talking about 11,000 to 12,000 crore kind of order inflow versus last time we have said 8 to 10,000 crore. So first in terms of the breakup from which particularly have EPC, solar, water, railway, how much we are looking at out of this 11 to 12,000 crore? And also, given the kind of competition will be there, particularly in the mutate, so will it not be coming at a lower margin?
For the guidance for the coming year, which is around 11,000 crores, which we believe that because of the last year ordering, which is all-time low for NHAI, so this time they would be definitely, post the elections, they would be awarding, they are having strong bidding pipeline. So that I believe from HAM as a HAM opportunity or EPC opportunity in highway. Even the MSRTC project, which could not be awarded during the last year, they are all having about 90,000 crores plus of orders they are going to award, and it's a 60,000 crores plus order. So this is likely one of the opportunity which we will be looking at. Another, apart from this, we are already having a discussion because the NHAI is looking at BOT around 2 lakh crores of orders to be awarded in BOT front. So in this particular, already being contacted by from prominent, as we have discussed during my opening remarks, that we are already in the close connection with these companies that we will be doing their EPC part. And this how for highway opportunity we are looking around 8,000 crores of orders to be added, and around 3,000 are balanced from water, where we already have been discussing that we would are looking into this sector as a promising sector, and say just a small part of the solar as well as definitely 2,000 crore plus from railways.
Okay, so 2,000 crore plus from the railway, and solar and water would be less than 1,000 crore combined put together that we are looking at this year.
Correct.
Okay, and second, in terms of the coming back to on the revenue again, so 20% to 6,000 crore plus kind of a number for this year. So similar run rate we looking at for FY26 also?
Yeah, of course, because the order which is around 12,500, if we usually are looking at what we did last year, around 16% year on year. So we again would, looking at this number, they would have been even better if the appointed date of Jharkhand package 10 and 13 would have been declared. But definitely it has been delayed because of various reasons. But now we are very clear that we would be touching around, say, around 17 to 18% year on year for this year, and it would be continued for subsequent years as well.
Okay. Great to hear that. And then this, whatever this 12,000 crore plus book is there. So from that, we are looking at the major revenue, and only 700 crore revenue we are looking at in FY25.
Just to clarify, 700 crores from the new railway projects, that is where the land is also available, and 500 crores we are considered for from solar for this year, and say the projects of Jharkhand package 10 and 13 where the appointed date would be declared in this year only. And again we are talking of the Jamshedpur and Tirupati project, where it's only a matter of only financial closure in one of the projects because the land is almost 90% plus available in both of these projects. So this gives us the immense confidence that we would be touching around 6,000.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Parikshit Kandpal from HDFC. Please go ahead.
Yeah, hi Harinderji, congratulations on a good quarter. So my first question is on the solar EPC. So can you help us understand a little bit more on how is the supply chain tied up for this? What are the price escalation clauses? Are the prices passed through for the modules? And you are investing almost 520 crores, so why the equity so high at 40%? So and how do you exit?
See, first part is looking into the supply chain issue, as we have understood that there are about 50% of the project EPC is a module, which we already have booked with 2 prominent suppliers, and that is around at a rock bottom price, which is around, but as of now it has never been booked, so around 13 rupees per megawatt. That is the one move which we have already taken. The second part is the other electrical ancillary work, transformer, inverters and other things. So there are a regular patterns. We do not expect any price escalation because we have taken the provision of price escalation, just a 3-year trend, 5-year trend, which we have seen. Apart from the solar module, these are all the products which are all stable. The one part, and the second part, which is very important, the equity and the monetization. So we are looking into this part where the equity definitely is around 500+ crore rupees, which is we may be able to monetize the project if the equity IRR is this much, and we already have seen that few projects has been monetized once they have been completed. But even if we retain the project for another 2-3 years, once we could have a cluster of the portfolio where we could monetize at a later stage, we will do that.
But sir, what is the timeline for execution and completion of this project? And also, out of the 1,307 crores, what is your share of order book in this? What the part you will be executing?
Share of order book, this is 55-35 ratio. So 35% they already Stockwell has been this has been taken out of the total order value. So 1,300 is the order which we would be doing in this particular financial year as well as next financial year. There's an 18 months contract project, the LOA which we received in the month of March. So right from 1st May, where already they have given the clearance for the land and every other thing. So it has been started. 18 months from now, it will be roughly around sometime December 25, like they will be completed.
Okay. The second question is on the railway. So now you've added new orders in the railway segment when some of the peers are exiting. Railways have cut down their exposure given the milestone-based payment issues and working capital issues, right-of-way issues. So how do you read this while taking these orders? Do you think these will be profitable and they'll not pull down the overall blended margins for the company?
In railway projects, earlier, whatever railway projects were being offered, they were very small projects, and I think within just last 3 years, the lump sum EPC project has been started in the railway projects. Now, they are also working on the same model as NHA has worked almost 15 years back. So now they are figuring it out very clearly that the decision has to be given and the land, if it is available. So there are two major factors. One is the decision, and I have seen this is a significant change in even the schedule of milestone where the payment shall be made. Even it is better than NHA. And NHA are also looking into, say, change in their, payment schedule where they already have given last 2-3 years in Atmanirbhar. Now they are following the same model that cash flow is very important. So it was last many years that this definitely railway struggle was there. But we have seen a significant change, and I think for 2 lakh crores of projects they are to be executed plus, and it's not only railway electrification or signaling and transmission. They are all civil, and it's a DFCC or even the high density corridor where the construction of viaducts are there, even station. They all require this key change, which I believe they have already have initiated.
But what will be the difference in the net working capital days here versus the road segment? So I think you are at about 30, 31 or 35 days of NWC. Do you think that will see a deterioration when the revenues from railways go up?
No, I think as we have experienced in metro, definitely it's a working capital cycle has definitely skewed very high, and no doubt. But in railway, we have seen like we are working in the railway projects for Bilaspur, we are getting very timely payment. Every month we are getting in Kanpur also, whatever we bill, we usually are getting the payment. So not much of a contract asset or unbilled is being created over there. But definitely some portion is there. But again, as we have seen, there's not much of the stock is to be built up in these kind of a project, where in highway it is very much required. So there are mix of it. But in any case, we are getting monthly payments where almost Schedule G and Schedule H are very exhaustive.
Okay. This is the last question on the BOT opportunity. So you will play it through subcontracting, or you'll also directly also bid for some of the BOT toll projects?
As of now, we are not at all interested in BOT toll. We are already, that's like Adani, we are working. This is the second project we are working. IRB, we work for 4 projects. And this NIF, they have approached us and even Q. So we look into this opportunity working as a EPC contract support to these companies.
Okay. Okay, sir. Thank you, and wish you the best. Those were my questions.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good morning, sir. Thank you for taking my question and congratulations on good set of numbers. So first request is you can send the HAM projects breakup between equity and debt and the grant received, because it is not part
a bit louder. Your voice is not very much audible.
So you can hear me now? Hello?
Fine. Yeah.
Yeah. So the first request, if you can share the HAM projects breakup, which you usually share in the presentation in terms of equity, debt, grant, and which would be really helpful. I think this is not part of our presentation this time.
You are talking about equity requirement.
Yeah, HAM breakup of equity, debt, and
I can just give you. There is 1,451 crore, which is the total requirement, equity requirement. 694 already has been infused. The balance equity in road is 767 crores, out of which we are assuming that the year 25 we would be doing that 505 crore, 26 131, and followed 131 in 27. So this is for road.
You said 504 crore in 25.
25 is 505.
505. 26 how much, sir?
This is 131 and balance 131 is 27.
In 24, they have used 694 crores.
Till 24, we have already done 694.
Okay. 694. But if you can give the breakup in Excel, because you are used to giving presentation, so that is fine.
Long list of around 10 projects, we definitely would be providing that.
And sir, coming back to the question on solar, I'm just harping on it. So if I may understand correctly, this is a 65-35 JV. And sir, the project is for 543 megawatt, which is also will be done in 65-35 JV, right, sir?
Yes.
And sir, on the tariff, you said 3.72. And sir, what will be the total project cost? I'm not talking about the EPC cost. What will be the total project cost on which you are calculating equity IRR of 14%?
So it's not 15%, it's the equity where the GST is also being considered. It's around 2,300 crore rupees.
So when you are calculating the IRR, you are including the GST, right, sir?
Yes, of course.
So this 2,300, okay. So this 2,300 crore is your share or it's a total project?
The total project 2,300 crore rupees, which we have considered 500 crore rupees.
Sorry, sir. Can you please repeat? I couldn't get you, sir.
If the total project value is 2,340 crore rupees, and
okay.
No, they are talking of the total project value. So put together for us,
which is including GST. Hello.
Yeah.
So this your share will be 65%, and you will be investing 540 crore, including which will be including GST, right, sir?
Yes.
Okay. And sir, what will be the PLF? It is mentioned 19%. So you are targeting anything higher, or you will be maintaining the same PLF?
No, PLI there is a
PLF.
It's not PL. We are getting average around 27 lakh rupees per megawatt in these projects as assistance. So there's a subsidy being provided to us while we are commissioning these projects during the commissioning.
This subsidy will come to the parent, sir?
Yeah, of course. Say, as a developer, we are doing two arrangements. One is the tariff which we will be getting from the DISCOM on a monthly basis. And the second is while we are doing this project, as being commissioned, we will be getting this particular, this is roughly, this varies from project to project, but this is roughly around 27 lakh rupees per megawatt.
Thank you. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
So just continuing on the solar project. So here you said you have tied up the procurement, but what are the clauses? Is the escalation, whatever happens, is it to your account, or are you able to pass it on to the?
No, not at all. Say, in these projects, the escalation is to our account only. We have earlier considered, but definitely, fortunately, we are getting this project being estimated from whatever estimate which we have done, and the procurement prices are much lower. It's an all-time low.
Okay, yeah. Understand. And in terms of, so you said there is an O&M of 15 years. So once you constructed, you will basically maintain the.
It's 25 years.
Okay. So and the overall project life is also 25 years. So the 3.27 per unit which you said, you will get it for 25 years.
Correct.
Okay, and the subsidy, sir, which you mentioned, 27 lakh per megawatt, is it coming to the SPV or is it coming to HG Infra during construction?
No, it is coming to SPV, but definitely we have considered certain portion to be passed on to EPC.
Okay. Okay, understand. Okay, and the second question is on the margins front. So you have obviously diversified into railways, solar, and you're talking about going into water also. So far, the contribution has been very small in terms of revenues, but incrementally as you go to FY25-26, obviously the share will go up. So what sort of margin trajectory should one expect? Should we go down, let's say, slightly to closer to about 15-14%, or you'll be able to maintain these levels?
So as of now, which we have seen as far as past experience of the project which you already have having in hand, and furthermore, which we would likely get for the year and all, we doesn't see much of a dip from this. Say 15% is the lower side which we have considered.
Okay, okay. Understand. And you said in terms of monetization, just coming back to solar again, just in terms of monetization, you plan to monetize this, or what is the, how do you look at it once the project is completed?
No, see, there are many other projects which they already have been done, because this is solar do not have a long story, which we had seen that there are a number of projects available in the market where being monetized. But definitely, yes, now onwards, there are not many parks and the parks with these projects being commissioned. So, and it's the total interest of the funds where the equity IRR being maintained, and this is a very less O&M cost. Say, just we have seen the 4 to 5 lakh rupees per annum per megawatt is the O&M cost. It's not like, totally not like roads, where in roads or any other projects which we have done, O&M is a big risk. Here it is not a risk. So we would be able to do that.
Okay. Understand, sir. Now, that's all from my side. Thank you.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on a very good set of numbers. So my first question again on this solar, sir. In this particular sector, we are taking a discount risk. Isn't this unrelated sector? Are you thinking of scaling this business up, or this is a one-off?
No, definitely the entry into this sector is just not a matter. It's a strategic kind of a decision being taken, where looking into the shrinkage of HAM projects in NHAI, where the margins are not that big now. And even the NHAI is coming into many projects on a BOT mode. So with that, we have taken that, and we would be looking into this diversity, where it's not only for restricting the solar park, rooftop solution, industrial. Where definitely the margins at both the level, EPC as well as equity IRR, should be maintained. That we already have guided that initially also. So, but looking into the back end, into the any module manufacturing also cannot be ruled out in that case.
And this is looking at a larger play in the solar. Is that right understanding?
Yes.
Understood, sir. My second question is on the pipeline for the NHAI. How confident you are that in this year the NHAI will bid out more HAM and more BOT asset? You did mention 2 trillion, 2 lakh crore, but I think of the pipeline which stands today is around 30,000 crore, which is still not getting finalized.
You're sure that initially, I think they are talking for BOT pipeline around 2 lakh crore, but initially I believe that they are prepared with only 50,000 odd crores of project on BOT. But for sure, there are many HAM projects in the bidding pipeline. EPC definitely are not a big number in now project. But as the cabinet approves this Bharatmala, which has been now scrapped almost, this is a new document which is going to be approved, where entire 2047 and 2035, I think there are 2 milestones which they are 20,000 odd kilometers on the as a greenfield projects also to be developed. So I think it's not that they are all dried up, but it may take some more months, few more months this year. But they are very, and we are also very much hopeful that we would be awarding around 6,000 odd kilometers during the year, and it be on whichever mode.
This includes HAM and BOT, right? 6,000 kilometers.
Yeah,
is that right?
Kilometers. Yeah, so roughly it comes to be 1.5 lakh crores.
Okay, and how do you think about this? Is this the Maharashtra tender? Do you think this will get finalized the next couple of months, or it will take its own sweet time?
No, I think it got delayed because of the election only, and now it's very much clear. This already RFQ done, RFP has been received. One tranche they already have received. Second tranche also that has been received. With that, I believe within a month or so it would be all opened, and this opportunity for all, it is all available, I think.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Yeah. Hi. Good morning, sir. I have two questions. The first question is on the interest level. Sir, what type of what interest rates are you seeing at a project level for a HAM project and for a solar project?
It's almost similar for solar HAM or highway HAMs. So we are having around 8.6%. This is the recent that we have done, right? 8.7%, which we recently have concluded, Jharkhand package 10 and 13.
Achha, okay. So my next question is on solar EPC margins. Like what kind of EBITDA margins are you looking at solar EPC? Because peers like Tata Power and SW report only around 5 to 7% of EBITDA margins.
So we have already calculated. There are two things. One is that we have discussed is some financial assistance being passed on per megawatt. That is around 5 to 6%. This loan is around 5 to 6%. So if 4 crore rupees per megawatt is the development cost, EPC cost, which we are assuming, so out of that is 20 lakh rupees, it's around 5%. This is one part. And about 5%, we are also expecting around 8 to 10% in the execution, wherever the supply chain and everything, procurement is the margin, which we have seen that this is a decent one, which we will be doing that.
Okay. And also, are you going to take turnkey like with modules contracts or without modules?
This is all with module only. These are the contracts which is to be done as a turnkey basis, where entire commissioning being done, and I think we need to sell the power to DISCOM. So this is the ultimate aim for development of this. This is a captive project.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for taking my question and congratulations on a good set of numbers. So my first question was with respect to our intent to kind of get into water segment. I mean, I think you spoke about getting into desal and water treatment as well. So how do we intend to take care of the qualification requirements? I mean, would you have somewhat similar sort of arrangement that you have for, let's say, solar, wherein you went with a local player, or the idea would be to kind of, let's say, build your own capabilities there, which could take you a little time to be able to have everything in place and then.
So we are working on both the options. One is I think one small company which do have this PQ available, where they are doing this business for last few years. So this is one part which we already are discussion at advanced stage. This is one, and second is strategic partnership through consortium and to looking into this opportunity, because we have seen in last year, because in the Rajasthan state itself 15,000 crores of order to be awarded. So because of the border code of conduct of Rajasthan state, later on now central elections are there. So this I believe that in every state JJM plus other opportunity, even they have opportunities, this water desalination plant, water treatment plant, sewage water treatment plant. Water is a big sector, is going to be a big sector in coming years.
Right. In the solar, if I mean on the face of it, it looks as if the return profile is somewhat inferior to hybrids, right? Because when I look at what you bid for 2,300 crores, you're supposed to infuse almost 540 odd crore, which is 20% sort of number. And then when I, let's say, compare it with hybrids, generally you tend to invest 15% of the total project bid cost, right? And the margins are somewhat similar when you're saying 15-16% is what you'd be able to have. Even in terms of project equity IRR, again, is somewhat similar. So here the equity requirement appears to be on a higher side. So does it mean, I mean, on an overall basis, I mean, it is somewhat inferior, or you believe in the numbers?
What is the total model about? This is the entire portfolio of 100, let's say 528 megawatt. In that equity commitment, which is per se what we have discussed with our consortium partner, that we are entering into this where the PQ and everything is available with them, that the entire equity is being done, where the return on equity is around 15% is rest assured, as while arriving at the EPC cost. So this is one part. And EPC of 35% will be done by the partner Stockwell and 55% by HG Infra. So this is the association which then we definitely will be building our team, because they already are into this particular sector. So what is important is that we are looking into not into equity IRR at a say for 528 megawatt to be developed, that is available, and this again. our core portion of EPC.
Thank you. The next question is from the line of Shubham Shaler from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. One is in terms of equity investment, 405 crore in FY25. Does this include the solar or it's only HAM?
Yeah, 505 is the road HAM project.
Okay, so including solar, any number that you can share?
775 crore, which is expected to be infused during FY25.
Okay, and a similar number for 26 could be how much, sir?
No. 26 is with these projects in hand, it's under just 400 crore rupees, including solar of 270 crore rupees and 131 crore from roads.
Okay. And this 1300 crore EPC for the solar, does this also include the O&M for the 25 years or it's only EPC, pure EPC?
No, it's a purely EPC cost to be booked within next 1.5 years. So that's the maximum. And as I was talking about the O&M cost, this is not a very big cost that SPV they would be doing, and SPV is going to get the revenue from the power being sold out to this DISCOM.
Right. And one last question. I think one of the subsidiary for this solar work that we have made, it is named as a green hydrogen power. So anything more to be read, we
are looking into some hybrid because nowadays going further it is a wind hybrid as well as the other hybrid model to be there, where the green hydrogen is also a hybrid model, where if you are producing power from solar in one area and definitely swapping it out with the hydrogen being produced elsewhere.
Okay, so maybe going ahead, there could be certain plans which is parallel to moving green hydrogen.
Registered with the government of Rajasthan even. So this is one part of it because you need to get registered.
Okay, fine. That's all from my side.
Thank you. The next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Thank you for the opportunity. Wanted to understand that we've even incorporated a subsidiary for hydrogen. So what exactly in the space of hydrogen we would be looking at? If you could just help us understand.
So it's a very initial stage because we need to get ourselves registered in this hydrogen space. Say in every state do have their obligation where we need to register ourselves first. So this is one part of it, getting registered. Post that, any opportunity likely to come from state or central schemes that we are keeping ourselves open for that.
Okay, got it. And in case of solar, so after this project, say we have enough competence, so we would be bidding for new projects individually, or we would again look for JV mode itself for even future projects?
But till the time we execute this project, let's say within a year down the line, we may have the PQ, in-house PQ. We do not require such arrangements where the partnership would be done. But by that time, if we require any project where decent margin, everything is available, we will definitely would be doing in partnership.
Fair enough. Thank you.
Thank you. The next question is from the line of Yash Dedai from Maximal Capital. Please go ahead.
Hello. Thanks for the opportunity and congratulations on the good set of numbers. Sir, I just wanted to know firstly about the solar EPC. So solar EPC, our share is 1300 crore, right?
Yes.
And that came from project value of 23 crore. And what is our share from 23 crore? Because if 65% is our share, then it would be around 1500 crore.
So that's 2340 crore rupees inclusive of GST. This 1300 is 55%, excluding GST. So
55%. Okay, it's not 65, it's 55%. That's what I was.
It's 65%, 65. That is excluding GST.
Okay. And sir, our margin guidance is 16% for the coming year for this FY25. This is EBITDA margin guidance, right?
It's EBITDA, yeah, 15 to 16 range.
So our current EBITDA for say FY24 was around 19%.
No, EBITDA remains at 16%, 16.2% for the year. I think as a consolidated, you are talking of the consolidated level.
Yeah.
We are talking of standalone.
And the consolidated margin would be around?
It's roughly around 2% plus over the margin which you usually make in EPC.
So it would be around 18% then?
Yes.
Okay. And I just wanted to know about the recent project wins which we had. So the amount of contract for which we which we bid for, and the estimated cost from the authorities were not matching. I mean, the estimated cost was higher than our bid cost.
They all are inclusive in railway projects. They are all inclusive of GST. So we have taken out GST out of that because the order value is coming excluding GST. This is one part where the correction has been done. And the one project of highway which was on HAM. So this is around 85% or 86%, which is the EPC value to HG Infra has been considered while calculating this total order receipt.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to one per participant. The next question is from the line of Prateek Bhandari from AART Ventures. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah, thanks for the opportunity. I wanted to understand about the order inflow of this particular quarter, that is Q4. What was the quantum of it?
So mostly the order which we receive is on Q4 only.
Okay. So what was the quantum of it?
It's around 2,240 crore rupees which we received in Q4, 3 railway, 2 highway and solar projects. And just a small 100 crore rupees which we added in Q3, that was the NTPC transportation, where we are already engaged in doing some projects of NHA with the transportation being done by us from NTPC for our projects.
And during the year we received the order inflow amounting to 4,350 crores, right?
Yes.
Okay. And also wanted to get a sense of your capex plans for the coming FY25.
That is not a big number. It's around 100 crore rupees, and we are also looking at some phasing out of some of the equipment. Around 25 odd crore rupees would be sold out.
Okay. And what would be the execution timeline for the...
you, sir. May I request you to please rejoin the queue for your follow-up question?
Yeah.
Thank you. The next question is from the line of Dhivij Patel from Finterest Capital. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible.
Yeah. So just wanted to understand, we have a very well diversified order book as of now, and so we have completed most of them. We are near to completion for some of them as well. So I want to understand the process of payment. So at what stage do we see these projects contributing to our top line or bottom line and so on?
Sorry? I couldn't get your question.
So I wanted to understand the process of payment for these order books, as and when these orders are completed. How do we see the money inflowing?
In all the projects, we are getting monthly payments.
Okay. And
the milestone achievement.
All right. And another question which I had was, so we've seen some slight, drop in EBITDA margins. So should that be a point of concern, or are we expecting these margins to stabilize from here on?
I think there is no dip in the margin as of now. It's almost all 15.7 to 16% range during the last 4 quarters, or even more than that.
Thank you. The next question is from the line of Kaval from Summer Wealth. Please go ahead. Mr. Kaval, can you please unmute your line from your end? Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Uttam Kumar Shrimal from Axis Security Limited. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity. Sir, just wanted to know the entire equity requirement for HAM as well as for a solar project. This will be made out of internal accrual or what?
So entire equity requirement over a period of 3 years is all manageable for the internal accrual. And definitely just to add to it, around 200 odd crore rupees, which we will be receiving during the year, this quarter tentatively, is also going to help us infusing the further equity requirement, where the monetization also already been concluded.
Okay. And sir, debt level will remain in the same level, or there will be some increase in debt during the year to execute these projects and all?
Sorry?
Debt level?
Debt level.
No, debt level definitely is a mix of all equity and debt. But the debt level...
I am asking, sir, the current debt, this will increase further, or this will remain at the same level?
No, debt at standalone remains almost similar level. It's around 450 crore rupees. It is not likely to increase much. In any case, it would be around 500 crores range. But at the SPV level, and at the consolidated level, whenever we are doing any project where the captive, being done, so these are the captive projects or assets being built, which definitely the debt would be increased.
Okay, sir. Okay, sir. That's all from my side, and all the best.
Thank you. The next question is from the line of Tushar Ghatate from Kamakya Wealth Management Private Limited. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So happy to see the diversification in the company. Just wanted to understand for the next 2 to 3 years, how do you see the order book panning out, like for the railway, for the water EPC? How do you see that? Your answer.
See, last 2 years, we were already discussing about that around 25% of the order book should be beyond roads. Last this year around, we are having about mix of solar and railway and road, where it's a very low contribution of road as of now. But definitely as we move ahead in last 2-3 years, next 2-3 years, we expect that we would be in a range of about 60% from roads and 40% from other than roads. It can be water, it can be railway, or even solar.
Sir, in the water treatment, you are targeting the municipal or the industrial water treatment?
It's not an industrial water treatment. It's a very basic water treatment or sewage treatment plant, where the government is offering such plants. They are being offered, or nowadays there are many state governments which are now coming with on a HAM mode even, with the central government assistance. JJM already the projects which are on EPC mode, it's not on a HAM mode. They are where the water distribution schemes are being, there are yet many schemes which are in the state of Rajasthan, MP and other states. Even in the micro lift irrigation, not many projects which likely would be awarded.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi. Sir, I need a couple of data points. Retention money, unbilled revenue, and mobilization advance as on March.
So as on March, mobilization advance, which has been decreased by 74 crore rupees, if you compare it to the last year number. You can take absolute number if you want.
Yes, sir. What's the absolute number, all this? Retention, unbilled, mobilization advance.
You just note it out. There's a mobilization advance is 285 crore rupees.
Okay.
The debtors, total debtor including retention. Total debtors including retention is 917 crore rupees.
917. So, sorry, sir. So, what's the retention money? So, it was 115 crore as on December.
There has been significant drop in that particular, because we have already submitted the bank guarantee in to Vanari projects as wherever the retention was recovered. So that has been released. So retention is now this SD and MD. This is very low. Earlier it was very high. Now it is 38 crore rupees. Out of 917, 38 is this one.
Okay, and unbilled revenue?
38. Sorry.
38 crore is the retention money, and unbilled revenue is how much?
To be very clear, it's not 38, it's 88 crore rupees, sorry, 88 crore rupees. Out of 917 crore rupees, 88 is retention and this other hold, and balance is debtor receivable.
And unbilled revenue, sir?
Unbilled is around, say, 900 plus. Because, say, in the recent past, unbilled in SPV, we didn't unbilled in these projects. So, SPV's unbilled is about 300 crore rupee plus. And some variation being approved. So this would be, I think, decreased in this particular quarter as well as subsequent quarters.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thanks once again for taking my question. Sir, I want to understand when can we get the appointment date for package 10 and 13 and the Chennai, Tirupati and elevated corridor Kali Mandir, sir?
This EPC of this Jamshedpur project, which is 610 crore rupees, tentatively by end of June, maximum by end of June, we will be getting the appointed date because 90% plus land is available there. And this Tirupati, again, say more than 90% land is available, but as we would be enjoying taking the benefit of the financial closure timeline, that we definitely tentatively would be around September, and we would likely to take the appointed date for that project. And by September only, we are expecting the package, this Jharkhand package 13, and where the land as of now is around 62%. And in package 10, which is the last one, let's say by November or December, we would be taking the appointed date of that package.
So in 13, you got 62% land, and in 10, how much percentage land is available?
It's around 30 something because it's a forest clearance which is yet awaited.
Okay, forest clearance which is pending. Okay. And sir, one more question on the stake sale. So you said that we have received 315 crores, and 60 crores is pending that from the NHAI for approval. And sir, there was 117 crores also, which was an unsecured one which we had given to the SPV during the in the interim for this transaction. We will receive this back also, right, sir? 16.7 crores.
Sir, already in 3 of the packages, it's all clean. Wherever unsecured loan was meantime been added, but we have really got this during the annuity payment in all 3 packages. And I think Rewari bypass is hardly any big amount. It's around 135 odd crore rupees, which would be Rewari bypass, and GST payment also there are 60 crore rupees plus 10 crore rupees where certain GST percentage where the certain approval is yet awaited from NHA. So put together it will be 200 odd crore rupees.
So basically Rewari bypass was 140, but it is now 135, and there is a GST of 10 crore and NHI payment of 60 crore which is pending. So almost like broadly 200 crores, 255 crores. That is what I understand. So it's okay, sir, and that is the thing. And sir, you also said that in the water segment you are looking for some acquisition. So if at all you go for a acquisition in originator route, what kind of capital investment you are targeting in such companies?
The pre-qualification is available. If the discussion is at a very preliminary stage, we are not looking at the big investment to acquire any company.
Okay, and sir, last question. In the solar project, you are investing 35% as equity and 65% is debt, because your share is 1,500 crore including GST in terms of the at SPV level, and you are investing almost 540 crores. So basically, you are getting this grant which is supporting your higher equity portion. Right, sir?
This project do have both the portions. One is the grant which we are getting, which is a significant number of 5 to 6% of the total EPC cost, or 4 crore rupees per megawatt, and that is one part of it. And second is the tariff which we are getting. A normal trend of tariff is around say 2.5 across we have seen in solar. But now here the tariff is about 3.27. Average tariff is 3.27.
3.27. Okay, sir. That's it from my side. Thank you and all the best, sir.
Thank you. The next question is from the line of Raj Katai, who is an individual investor. Please go ahead.
Hello. Yeah, hello, sir. Last 5 years, we have grown at a phenomenal rate of 35%. So what is the vision for the next 5 years in terms of revenue, profit, and any new line of areas of business that we plan to get into?
So what we already have discussed, we are now working in 3 sectors. Say road in any case would be the prime focus. But going further, we would be maintaining to just sustain and scale upon the platform which we have created. That is how the company is looking at next 5 years to grow at around 15% year on year, and making the decent margin, and should not be less than very much less, and that is the margin guidance.
Okay, thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
So thanks all. We appreciate everyone joining us today on the call and hope that we have addressed all your questions. If you have any further queries, please do not hesitate to reach out to us or our IR advisor, Go India Advisors. Thank you again for your participation. Good day.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.